Welcome back. You're still tuned into Midcap Masala, and as promised, let's put the spotlight on Balaji Amines. We now have the managing director of the company, Mr. D. Ram Reddy, now joining us. Mr. Reddy, morning. Shesha this side. Thank you for taking your time out and joining us here on ET now. And very strong set of numbers is what you've reported for the quarter gone by. Revenues have risen by a solid 27%. In fact, I was just going through the bottom line. It has nearly doubled on a year-on-year basis. What led to this kind of growth, and how much of this is sustainable as we head into the second and the third quarter?
See, this is definitely, as I said in my earlier interviews also, 22 to 24 is definitely sustainable for our type of industry, specifically for specialty chemicals and other chemicals. And here it is about 26% because of our integrated facilities and import substitute portfolio. So we could do this. In spite of disturbance in the Western Asia, we could do this. Even though there was some volumes are down. If you see the year-on-year basis, some volumes are down because of the logistics, even for the inward and outward for the international market logistics are disrupted. The reason we could not do the volumes. If the volumes are done, then we would have been come with a better results than what we have done now.
Okay, so those are several factors which were at play in the first quarter. But FY27 guidance that you had shared at the end of last quarter suggested a 10 to 15% volume growth along with the margins in the range of 22 to 23%. How does this guidance for the full year change basis the numbers that you've reported for the first quarter?
Definitely, coming quarter, I'll tell you, there are the 3-4 new things are happening. One is the DME we just launched, and sampling is going on. Probably from the coming month onwards, you will see the results of uptake for the dimethyl ether, which is alternate for the LPG. And along with that, the acetonitrile new plant with a higher capacity and with the new technology will be coming online from the next month, maybe by 20th of August onwards, we'll be in the market for the selling the acetonitrile. And third, there's a plant called NMM that is also scheduled for the next month. Along with this, in that our subsidiary side, hydrogen cyanide, sodium cyanide, and EDTA derivatives, these are all lined up to come in by the end of the fourth quarter. Mid of the fourth quarter, those are also launching. So going forward, we will see all new products coming in, even though the difficulties the Western Asia, I feel that we should catch up those values what we lost in this quarter in the coming 2 quarters.
I understand that there are several products lined up, but does that mean that your guidance remains intact?
Definitely. I feel that definitely we should be reaching the values, what I said, 10 to 15%. Because the product launch DME, it has not gone to the market. We are just doing the sampling to the various customers in the propellant market and all other markets.
And what will the incremental revenue be from this DME that you're talking about? I believe it has now been commercialized. It has not reached the market is what you're telling us. But what will the incremental revenue generation be from this new product?
See, definitely there will be 10 to 12% revenue increase will be there, because this being a first year, we cannot expect that it will go into 100% capacity. But definitely in the next year, you will see the almost 200 crores minimum revenue from this plant, addition to the existing.
Okay, so that's the incremental revenue that you are expecting from this. Let's also talk about your subsidiary, Balaji Specialty Chemicals. It has now turned profitable, and it also has a 750 crore expansion plan. And I believe last time you did tell your investors that the IPO has been deferred until the expanded portfolio is commercialized. Is it now the right time to perhaps unlock value for shareholders by listing this subsidiary of yours?
Too early to say, but yes, definitely there are two things are happening in that. Number one is the brownfield modifications in the plant for the manufacture of the value addition products like TETA, triethyl triamine, and TEPA, which are coming first time in the country. Countries importing these products about 3,000 to 4,000 tons. We will be launching this in the coming 2 months. And along with that, the greenfield expansion of the 6 to 700 crores, that cyanide derivatives, and also EDA derivatives like EDTA and EDTA NA, all these products will be coming in the pipeline from the last quarter of the current financial year.
Okay, so that's as far as the listing of the subsidiary is concerned. You did talk about your FY27 guidance, 10 to 15% volume growth intact. What about FY28 then? I believe 3,000 crore is the revenue target that you had shared earlier. Does that remain on track?
Yes, definitely. I'm confident that because all these plants will come in the stream, and next financial, that is 2028 end financial year, definitely we should be in a position to reach 3,000 crores if the prices goes like this.
Okay, so 3,000 crore revenue target for FY28 also continues to remain intact, along with the 10 to 15% volume growth guidance that you shared for FY27. Let's also talk about margins then. And raw material prices for you have risen on account of West Asia crisis. How much has the increase been? How much has been passed on? And any impact on margins that you're experiencing at this point in time?
If you see the last quarter and this quarter, both the quarters are similar margins you have seen. That means this is sustainable. Maybe 1 or 2% here and there, the coming quarters, definitely the going forward will be doing the same margins. And passing on, it has already happened because it's almost 4 to 5 months. We already started passing on to the customers. First 1 month we could not do that, but after finishing this raw material stocks what we were having in the pipeline, then we are forced to pass on the increases to customers.
Okay, Mr. Reddy, one last question before we let you go, and I wanted to talk about your hotel business because it's just a small pie of the total revenue. Are you looking to divest it? Does it fit in your total strategic roadmap of the company? And what's the outlook looking like for the hotel business?
For the divest, not yet any decision taken. Definitely, we want to keep that within our portfolio because now it has started giving from last 2 3 years started giving the supporting to the bottom line to the main balance sheet. So definitely going forward, we are aware that the hotel industry, hospitality industry is doing well across the world. So we think that it's good for keeping it within the company only.
Okay, so that's as far as the hotel business is concerned. You did talk about your specialty chemicals business as well, the subsidiary, and the outlook on margins for the next few quarters. Mr. Reddy, thank you so much for taking your time out and joining us here on ET Now.
Thank you. Thank you.
And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. Buy now, sell now will come up next.